The economic confrontation between the United States and Iran is entering a dangerous new phase. What began as a long-running sanctions campaign has now expanded into a much broader struggle involving oil exports, international trade, financial networks, and the vital Strait of Hormuz. Recent U.S. measures have threatened to put even greater pressure on Iran's already weakened economy, while Tehran has warned that it will resist what it considers economic coercion. The U.S. pressure campaign. Washington's strategy is centered on cutting off the sources of revenue that keep Iran's economy functioning, particularly its oil trade. The Trump administration has announced plans for tougher sanctions and has warned countries and companies that continue doing business with Iran that they could also face economic penalties. That raises the stakes far beyond the two countries, especially for major buyers and trading partners such as China. Earlier in 2026, the White House also authorized the possibility of additional tariffs on countries that purchase Iranian goods or services, demonstrating how Washington is attempting to use access to the U.S. market as another tool of economic pressure. The White House, Iran's economic response for Tehran, the pressure comes at a particularly difficult moment. Iran has already faced severe economic disruption, and restrictions on oil exports are threatening one of the country's most important sources of foreign currency. Recent shipping data indicate that Iranian oil exports have been severely disrupted, with activity at the country's major export terminal, Karg Island, falling dramatically. Financial Times Iranian officials, however, have rejected the idea that sanctions will force Tehran to surrender. Instead, they argue that the United States is attempting to use economic pressure to dictate Iran's political and strategic decisions, why the Strait of Hormuz matters. At the center of the economic confrontation is the Strait of Hormuz. This narrow waterway is one of the world's most important energy corridors. Restrictions on shipping through the strait have already reduced oil flows and increased uncertainty in global energy markets. That means the consequences of the U.S.-Iran confrontation are no longer limited to Iran. If shipping disruptions continue, countries that depend on imported oil and gas could face higher energy costs. Businesses could also face increased transportation and insurance costs, while consumers could ultimately feel the impact through higher fuel and commodity prices. The global economic impact. The growing confrontation is also creating tension between Washington and countries that continue trading with Tehran. China is particularly important because it remains Iran's major oil customer. New U.S. sanctions targeting Iran's trade partners could therefore turn the dispute into a wider economic confrontation involving major global economies. There is also a risk that financial restrictions and disruptions to shipping could create further volatility in global oil markets. Recent reports have already linked the escalation to rising crude prices and increased concerns about inflation. Equity. What happens next? The key question is whether economic pressure will bring Iran back to negotiations or push the two sides toward even greater confrontation. The breakdown of previous diplomatic efforts has left both Washington and Tehran with fewer obvious paths toward compromise. The United States is increasing economic pressure, while Iran continues to resist demands involving its nuclear program, sanctions relief, and the Strait of Hormuz, and that creates a dangerous cycle. More sanctions could further weaken Iran's economy. But if Tehran responds by restricting energy shipments or retaliating against U.S. interests and regional partners, the economic consequences could spread far beyond Iran. Closing. The U.S.-Iran economic conflict is therefore about much more than sanctions. It is about who controls access to energy, trade, finance, and strategic shipping routes, and how far each side is willing to go to gain leverage. For Iran, the challenge is surviving increasing economic isolation. For the United States, the challenge is determining whether maximum economic pressure can achieve its political objectives without triggering an even wider regional and global economic crisis. For the rest of the world, the stakes are clear. If economic tensions continue to escalate, the price may not be paid only in Washington or Tehran. It could be felt in energy markets, businesses, and households around the globe.